I was muted. So, hey, good morning. It's your boy Yvan Sison, host of Startup Area Show, the number one real estate investing show for startup angel investors. We're long December 1st, 2021, which is coming up. This week is Thanksgiving week. I don't have any guests for this week, specifically because of Thanksgiving week, and I've incurred lots of let's just say I'm just feeling a little bit under the weather, especially today, but I'm showing up because that's important to me. I'm keeping track of this consistency, and so that's thing that's really important to me. We have currently five guest interviews, and then one solo interview, and then I'm gearing up more interviews as we speak. So we're doing live pre-recordings as we speak, and if you haven't done so already, please check out startupariashow.com. You could probably see the difference in tone of voice and how I sound. I am not necessarily sorry for that, but I've been working so hard that maybe I should take care of myself more. That's really a great reminder of it. One of the things that I've been working on is this presentation right here. I made a 10-slide investment thesis. This is really by Guy Kawasaki. He's the one that really not necessarily launched, but really made the formation for a 10-slide pitch deck for Shark Tank style startup angel investors. So this is my investment thesis for my company. I just wanted to give a preview so I could give a better presentation later on tonight. So what you'll see is some notes on what to have on the slides. So just bear with me. I'm still editing, drafting this. This is draft one, but let's go and see what's up. So my company's name is Next Opportunity Capital, which is definitely definitely a sponsor of Startup Area Show. It all has the main backbone of Startup Area Show is Next Opportunity Capital, and my name is Yvan Sison. I'm the managing principal. There goes my business address. There goes my email address and my cell number. Let's go ahead to the next slide. On this next slide, I will be talking about the problem or opportunity, especially with startup angel investors lacking or having that huge barrier of entry being education to diversify in real estate instead of waiting on 30 startups to hit IPO or exit. They could rely on cash flow. And so that's the problem and opportunity here. I will also say that from all my guest interviews and all my research, all the data points have come around to say that there needs to be a way to not commercialize, democratize the amount of education for these real estate opportunities in private placements. So that's that slide. I'll go more in depth later tonight or tomorrow when I do go live. I'm just giving a feel for really practice for myself. So as far as value proposition, my value proposition or the company's value proposition would be to diversify, to help startup angel investors diversify for cash flow via recession-resistant multifamily. I'll talk about the profitability versus risk, considering startup angel investing is really more high risk, high reward. Real estate is more low risk. It has benefits. I mean, it really depends on the investor profile, but the second, the ongoing cash flow, as opposed to startup angel investing or startups, really that you got to wait until exit, which is a longer period. And most oftentimes there are startups that fail, and so that's kind of why if you invest 30, on average, you will hit one unicorn that actually makes you money, right? But again, it's high risk, high reward, which 10x or quadruple x or not even quadruple, 1000x your money. Number three, main benefit would be the low correlation with startup investments, considering that there's low risk. Really, it's more of a diversified balanced risk reward ratio. I understand that startup angel investors invest in startups with 10% of their own money, their net worth, and so with real estate, typically it's more low risk. It's a great way for diversifying. Along with that, real estate comes with tax benefits and stuff like that. So we'll go on the next slide for that. Really, the underlying magic of how Next Opportunity operates is we are trying to democratize the education. We're the number one real estate investing show for startup angel investors, and we will remain and try to be. How are we going about doing this? On Startup Aria Show, we're going to interview startup angel investors, apartment owners, and really giving their perspective on how they operate and what their perspective is in regards to um, owning real estate, buying real estate, investing in real estate. The second is one of our unique advantages. We work with, or we are pre-vetting sponsors on the behalf of our startup angel investors that are looking to partner with us. Typically, we'd look for 20 commercial real estate investing experience. They understand the ease of investor experience, and they have a verifiable track record along with an online presence. We are now shifting into a gear of being all manual analog to now digital and social media, and so we kind of want to have that as a prerequisite for investing our partner money to sponsors. Number three, which is the most unique part of our unique advantage, is sorry. We are looking to be like a startup angel investor where we have a nonprofit startup fund using 10% of our company's net worth to invest in tech startups, which really gives it a unique experience because then we're both plugged into the real estate stuff. And considering that we have guests and advisors from the startup world, we could probably have them come on as the board of advisors to invest in future startups that solve huge problems in the long run. So that's the underlying magic. Next slide would be the business model. I would explain the multifamily syndication model in relation to the Jobs Act, how SPACs work, and how this real estate private equity firm that I have is going to help 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 invest in real estate projects on behalf of the passive investors that are coming aboard. And then really the third part is the CCIM due diligence, which is really the world-renowned, not world, state-renowned, United States nation-renowned commercial real estate membership that comes into play. So this would be like a certified designation for people that are very well knowledge, and this they teach not only undergraduate but master's class. So I'd partner with someone that has that great experience to do our underwriting or due diligence properly. The go-to-market plan is, of course, to partner up with sponsors that have the deal flow. The second is to find off-market, because really that's where the deals are, off-market relationships. And then the third would be strategic partnerships. One of my mentors, I think he's coming up soon. Let's go to the team. Oh, I'll talk about him later. So this is just a preview of how it all works, at least on my end. As far as the competitive analysis, comparing ourselves with the others, I mean, it sounds like I'm doing the presentation now, but really it's more practice for me. So as far as like the competitive analysis, I would say that most of the time, multi-family syndicators or not only that, but real estate private equity companies go in the front door. They knock, they do direct mail, they do cold call, they do cold email, but essentially that's something that we've set ourselves apart in which we're actually going through the back door. The second is most people invest a lot in broker relationships, which we understand is very much valuable. But for someone that's just starting off, I will say that broker relationships take a long time. Relationships in general will take a long time to nurture, in which the stuff that they are brokering are going towards people that already have the verifiable track record and whatnot. But that's kind of why we want to partner up with sponsors. And instead of broker relationships, we're mainly focused on apartment owner relationships where we could have off-market deals. The third is there are lack of capital, or there's too many dilution in the team, in the capital team, in the general partnership side. And so we're realizing that if you partner up with a small number of people in a group, it's much easier to make the decision-making process better, and it's less friction for everyone. Let's say in the capital team group, under the umbrella of a general partner, as the capital team group is trying to raise money, there are many other fundraisers, if you will, that are looking to get in a cut into the deal. And so that's kind of why it really dilutes down into what smaller LP, not what smaller GP or capital raises can get. And so what we want to do is make that model into have a GP, and then us as a one of the main co-GPs that actually help fundraise the deals themselves. And so I can talk about that structure a little bit more later, but just going through these slides as far as the management team, I only included a few. The first, of course, me, Yvan Sison. I'm the managing principal and host of Startup by Ria Show. I really, really am passionate about the education part because that is the main barrier of entry for startup angel investors that are looking to diversify in real estate. The second person is my great mentor, David Monroe. He has a CCIM designation. He specializes in both market analysis and due diligence. When I tell you he specializes in it, he not only looks at data from before, but also forecasts the data. And not necessarily guaranteed to say, hey, this is what's needed, or like basically telling the future with a crystal ball, but essentially with the data that's provided, this is the amount of households that is needed and the amount of jobs within the specific economy or industry. And I sort of specialized in that before when I was a grad, when doing commercial real estate as my major, real estate and development. So due diligence is something that he has great practice in. I mean, I'm more leveraging on his part on that, but he's really my main mentor for doing all this. The third person on our team are a numerous amount of pre-vetted multifamily sponsors that we'd like to work with. They handle deal flow and really operating and asset managing. I think those are two importance. Basically, you have the educational role, you have the due diligence to make sure everything is right, and then you got the deal. So that's our main team. More to come in the team, but essentially that's the structure. As far as like financial projections and key metrics, these are the high level typical deal structure and fees and exit strategies. And so if you could just read this down, I'm not going to read all of them, but one of the major ones, major two, I would say is, especially for startup angel investing, is IRR, which is the internal rate of return, which is the expected amount of money that you'll get from your investment while it is in the deal. So upon exit, you can receive up to 22% in a 3 to 7 year period. But it all depends on the deal itself, because it's deal by deal, not necessarily a fund. Blind pool fund, sorry, it's a deal by deal fund. So as far as like fees and acquisitions, the managing team or general partners usually get 1 to 3%. I'm still playing around for the structure on that, but that's all, of course, deal by deal. And then the asset management fees. I think not a lot of people really talk about this, but the fees matter as much more as what you get in return, because yeah, that's just part of investor profile and investor due diligence. So that's the typical financial projections and key metrics into getting a deal with a private placement memorandum and stuff like that. So that's deal by deal. I could go more in detail on that later on. This is just a snapshot, by the way. So as far as like current status, accomplishments, timeline, and use of funds, we're currently looking for soft payments, and of course, we are increasing our invest database. We currently have 40 people that are interested in investing with us. Number two, one of our major accomplishments is to start startupbyriashow.com, which is basically the number one real estate investing show for startup angel investors, and I'm sure that that's how you found out about this. And so the third is the use of funds will go to three to five multifamily deals in 2022. Those are exclusive to our investor database. So if you haven't joined in yet, so please join in as we pick up on these deals coming along. And so, as a sense of urgency, invest with us. You can reach out to me here. That's my cell. That's the business address. However, in the email that you'll get soon, I'm sure there is a more more defined call to action in regards to what to do. So this is the end of the thing, and so just know that a word about liquidity. There's a pop-up right here. No entrepreneur knows when, how, or if she will achieve liquidity. Yet, many include in the slides that there are two liquidity options: an IPO or an acquisition. It's typical of startup investing. So for real estate, it would typically be cash flow is a liquidity. ongoing cash flow, quarterly, probably invalids and stuff like that, and the exit itself. Those are the main two types of liquidity for real estate. So I just wanted to give a snapshot of how that looks and how it's all being performed. If you have any questions and any feedback, it would be amazing. Other than that, you can probably hear that I am really under the weather, but I'm still showing up as I can because I'm trying to be as consistent. I even skipped going to the gym this morning just because I'm feeling under the weather. So yeah, that's Startup Aria show for you. We're democratizing the education for real estate. And if you haven't done so already, please check out startupariasha.com. Launching December 1st, 2021. And it's your boy, Yvan Sison, host of Startup Aria Show, the #1 real estate investing show for startup angel investors. I hope you have an amazing day. And please remember your X, Y, and Z. My X is to get this done, get this draft done. My Y is always going to be to help retire my family, my parents, and my little sister. And my Z is going to be my end goal to reach by 2026 to have passive income of $10,000. Not only that, but actually it's shifting now to more impactful thing where I am going to educate 20 accredited startup angel investors by the end of this year. That's my goal. Otherwise, have an amazing day. It's your boy Yvan Sison signing off. Ending the stream now. Bye-bye.